All right, welcome back to the show. I'm Mike.
Hi, I'm Maggie.
And we are Friends on Fire.
This is a podcast on a mission to get friends to talk about money. I just want to start off by giving a huge thanks to Clap for Daylight for allowing us to use their music for our intro music on the podcast. You can find their music anywhere you listen to music, on iTunes, Spotify, etc.
Yeah, I'm really happy you had that connection. I think we have a pretty good intro jingle.
Yeah, my thing was I really wanted real music. No offense, but I just don't like electronic sort of fake sounding music. And I love podcasts that have real songs written and performed by real people. So
cool. So what are we going to talk about today, Maggie?
We're going to talk about taxes.
Yes.
So I need to get myself a little jazzed up about taxes. And I had an idea to get us started.
I'm already pretty jazzed up about taxes.
Yeah.
I couldn't sleep last night. I was so excited.
I know. So this is about as exciting as car insurance. So
Yeah, right.
I thought we would read some comments that we've received from our listeners. In our first couple weeks of launching, we received some awesome feedback from people. I mean, a lot of them were friends and people that many of us hadn't heard from in many, many years, and just were, just people get out of touch over time. But it was really cool to see different people reaching out and just having some really positive and kind stuff to say about the podcast and the financial journey they've been on also. We're going to read a few comments real quick. Okay, our first comment is from Tori Inman, and she actually is someone that I used to work with. She now is a professional photographer, and her company is VI Photography. So you can check her out if you need a photographer for any family photos, etc. She's got some cool stuff. Her comment was, Maggie, I've been listening to your podcast right now, and I'm loving it. I like how you are sharing your personal journeys. I'm on a path to financial freedom since my early 20s. I became debt-free at 24 and stayed that way for almost 10 years. I have a dip in debt now for finishing paying our home renovation, but have a plan to pay it all off in a few months. I haven't heard the term FIRE before the podcast, but I love the message and mission. You guys are awesome. Thank you, Tori. That's really nice to hear.
Yeah, that's great.
Okay, here's our next comment. I'm so excited about your podcast. My wife and I have a similar approach to finance, and financial independence is one of our soapboxes within our friend group. But this FIRE thing is new to us, and I look forward to learning more about it in the new year. Cheers. Also, very kind. I was similar, and I've talked about it on the podcast in the sense that I've lived my life this way for a really long time, but I didn't know the actual term FIRE, which is financial independence, retire early, until a couple years ago.
Yeah, it's funny that when you get really invested in something, you just sort of over time assume everybody understands it as well as you do.
Yeah, it's funny. A couple people still say to me, like, what is FIRE? What's the FIRE part of Friends on Fire? Even my brother the other day just was like, I finally realized what the FIRE part was. Okay, our last comment is, hey, I just wanted to share that I've been listening to your podcast. I'm always on the hunt for new ones, and I love listening to people I actually know. Definitely laughed at your co-host 03 Explorer because of my 05 Tahoe just hit 320,000 miles.
Nice.
And my husband's is an 03, but with less miles. When you have 320,000 miles, by the way, everything has less miles.
That's insane.
And
awesome. Awesome.
Yeah,
insane.
awesome as in like impressive. You've stumped Mike on feeling like he could drive the Explorer longer than he realized. Okay, I'll pick this back up. She continued, I will drive these until they die. So hearing other people do this makes me feel less crazy. I just wanted to share that I love it and it's been helpful to listen to. Again, thank you so much. It really means a lot. Mike and I are putting our personal time into this, usually on evenings and weekends because we have pretty full, demanding, busy jobs. And it makes us really happy to hear that people are enjoying it and that it is adding value to people's lives in some way.
And I've been getting a lot of comments from people who I knew were frugal, but have kind of reached out to share that this is like really meaningful to them. And also from a lot of new people. I have people around the office and friends that I haven't talked to in a while reach out to me to provide a lot of positive feedback and share some of their stories. And also ask me a lot of very specific questions, which I have trouble answering without context. Like,
I get the same thing.
Like, what should I buy right now?
Yeah.
Well, I have no idea what you're talking about, so I need a little more info.
Yeah, you're like, I need you to turn over your full financial records for me to give you an answer.
Yeah, exactly.
Okay, so we should jump into taxes. I feel like we've gotten ourselves excited now.
Yes.
Let's do it.
All right, so taxes are due on April 15th, and we thought it'd be a good idea to share some of our thoughts on not just how to go about filing your taxes, but what are some of the key tax benefits that you should be looking out for on a daily basis throughout the year.
I think it's also worth noting, Mike, it's early February right now. And so you should have all your stuff. You should have received all your stuff by now. And hopefully you either have thought about filing or going to file soon, et cetera. But I hope this serves as a little bit of inspiration to like, not wait until April 14th to get everything submitted.
Exactly.
I know you don't need inspiration, Mike, because you probably file yours the first day you get your last statement.
Actually, I even start before then. As soon as TurboTax goes on sale, I buy it and start like prepping my submission.
Yeah, I can. It's exciting. Okay, Mike, how do you feel about taxes?
I think it's no surprise that I love it. So it's an opportunity for me to wrap up my fiscal year and see how effectively I managed my contributions to my accounts, my income, and how low I can get my final tax bill. So it's a lot like my real job where we have financial year-end close and we get to wrap everything up and we get a really good picture of how the year went. That's how I feel about my personal finances. So for me, it's very exciting. I realize I am in the minority here.
Yeah, because I don't hate taxes, but at the same time, I'm not excited about it. Like it's another thing I have to do. It's another, it's a decent amount of work to kind of get everything collected and organized. And so, it's just sort of one of those things I have to do. I wouldn't refer to it as something I'm excited for, but I'm glad you're excited.
I'm hoping that by next year, you will feel the same level of enthusiasm as I do.
We'll see.
That will be my goal.
Yeah, good experiment. You have to add that to your 2020 goals.
That's a good one. So before we get into some of the specifics around taxes, we do need to mention that we are not accountants. We are not tax professionals. We're giving you our opinions about our situations and how you might want to go about learning about yours. But if you have questions, you should reach out to a tax professional.
So actually, one of the first things Mike and I talked about when we were starting to have all of these personal finance discussions was around taxes, because I think it was it around like March? It was like this time last year, basically.
Yeah. So I was only a few months into the job.
Yeah.
And for some reason, I was providing tax advice to this random lady in marketing.
That's how our friendship blossomed, actually.
Exactly.
We're talking about taxes. So I was asking him a bunch of questions. We were having an issue with our accountant last year, and we only have used an accountant for the past couple years because of some additional complexity in our taxes. I used to file my taxes by myself every year. Sometimes I would use like an online, I guess once they started, I would always use an online tool. Sometimes I would pay the like extra with H&R Block to have a tax professional eyeball it and review it. But in the end, I would never pay more than $100 for the software and for an extra review. But in the past few years, I admittedly have started using an accountant. And I know Mike was very disappointed in me for that and kept saying like, you don't need to, you should understand this yourself. And he's actually the one that helped catch an issue when I was sort of throwing some numbers in front of him, helped catch an issue with our taxes last year that made my husband and I look into things in more detail and realized our accountant had made a really big mistake related to some tax credits and other things. We ended up catching him on it. He kind of admitted that he was in over his head on this particular situation. And just didn't have as much experience in it, and basically like gave us all our money back, didn't charge us, and we went and found somebody else who specialized in these particular types of situations. And so we paid, we're paying like a decent amount of money, but we are saving. I think you always correct me in terms of how I use the word saving. It's not exactly that we're saving.
Right, you're still spending money.
I'm still spending money, but we have decided to use an accountant for another year or two to deal with these particular tax credits and the complexity of them that actually do save us more money in the end.
At the end of this episode, I'm hoping that people feel much more confident in doing their own taxes. And Maggie, let me just pick on you a little bit. The way I discovered that you had made a mistake with your accountant on your previous tax filings was just dividing the taxes you paid over your income to discover that it was a rate too high to be possible, which you then pointed out to this guy and found the solution. And so even though situations may seem complex, hopefully at the end of this episode, people will feel a little more confident, at least knowing where to start and learn. But we'll get into that later in the episode.
You want to talk about tax brackets?
I do want to talk about tax brackets. So this is something that when I'm talking to people, I definitely take for granted that it is not well understood. We have a marginal tax rate system, which means that your income falls into quote unquote brackets.
Should we clarify that we live in the United States? So we're talking, because we actually have some listeners outside the US, which has been pretty cool to see on our podcast stats.
Oh, cool.
But the information we're sharing today around tax brackets is for the United States specifically.
The actual numbers are specific to U.S. income taxes. However, I think all developed countries have marginal tax rate systems.
Right.
So this should be applicable to everybody. Basically, the government splits up income into buckets or brackets. And so for the U.S., there will be different percentage tax rates based on the different income you earn. The popular misconception is that the more you earn, the more all of your income is taxed at a certain rate. So if you are earning a lot of money, all of your income is taxed at 35%, which would be one of the top tax brackets. And that's not how it works. It falls into different buckets, and those buckets are taxed differently. So let me just give you some specific numbers. The lowest tax rate in the US is 10%. And so for individuals, this is filing your taxes individually. This is different than filing as a married couple. All these numbers we'll put in the show notes or links in the show notes.
This is going to be a really riveting show notes.
Yeah,
this
it's going to be super complicated.
We're going to link to all the tax brackets. Yay.
Right, there's going to be lots of irs.gov links in there.
Can't wait. Mike, I think an example would help. So if you make $75,000 a year, explain how that $75,000 is going to be bucketed into brackets for taxable amounts.
So if you make $75,000 in gross income, your first $9,875 is going to be taxed at 10%. The income after that, up to $40,125, will be taxed at 12%. The income up to your $75,000 after the $40,000 is taxed at 22%.
And I mean, that's the main thing people need to understand about brackets, because there are, Mike, as you said when you started, and I used to think this a long time ago. I mean, a long time ago.
Like a month ago.
Like 2 years ago. That it's based on that you're in that bracket for your entire income. And so I used to think like, oh, well, if I can just reduce my income below this amount, I'll be in a smaller bracket. And I'm like, oh no, like $1,000 of it will be in a bigger bracket and the rest will already have been in that smaller bracket. So I think that's just worth understanding.
Right.
And particularly as you get into higher incomes, it just shows the value in finding more things to reduce your gross income and different tax deductions, essentially, so you can reduce your gross income. You know, you start to get into the amounts, you know, over 100,000, over the 163,000 mark, the 207,000 mark, et cetera. And you get into these like high 20, mid 30 and higher percentage tax brackets. And you realize that, you know, those last chunks of money that you're earning are taxed at a really high percentage and you're only bringing home like 60% of it. It starts to show the value in reducing your taxable income, which we'll get into in a little while.
And I want to clarify one thing you said, Maggie, which I think is probably why people get confused. You don't want to reduce your gross income. You want to reduce your taxable income.
Thank you.
So you never want to earn less because it puts you in a lower tax bracket. That would be crazy. You want to keep earning as much as you want. You just want to make sure that you're being as effective as possible with your taxes.
Exactly. This is why Mike's on the show, by the way. For the real facts.
I think I'm about to do a lot of talking, Maggie. So feel free to jump in with some additional commentary.
Okay, I'll jump in with some unrelated stories at some point.
Great. So let's talk about... We talked about tax brackets. Let's talk about how taxable income works. So there's basically two types of ways you can reduce your tax liability. One is tax credits and one is tax deductions. Tax credits are the minority of your tax opportunities. That just means that if after all of your taxes are filed, you owe $5,000 in taxes and you get a $1,000 tax credit for something, that means you pay $4,000 in taxes.
What are the types of things you can get tax credits for?
There's like a child tax credit. There would be tax credits for certain...
Like solar panels. When electric cars first came out, I don't know if they're still offering them, but you got a big tax credit for that.
Right. There's state and federal tax credits. And you should certainly look for those opportunities, be mindful of them. Software like TurboTax does a great job of asking you
it'll
questions.
ask you like, did you do any enhancements to your home this year? And then it'll dig into it if you did. Yeah.
Yeah. So keep an eye out for them, but they're a small portion of your overall tax situation. Where things get interesting is tax deductions. And this goes back to our taxable income discussion. Deductions reduces the amount of income which is taxable. It is still your income, but you're not paying taxes on it.
So this is like a 401k.
Exactly. The 401k is going to be the most popular and well-known version of a tax deduction. You save money pre-tax, which means that the money's yours, but it reduces your taxable income.
So when I put in the max every year of 19.5 into my 401k, it reduces my taxable income by $19,500.
That's right.
Which is great.
So any opportunity you have to reduce your taxable income, of which there are many, and they can be quite large, you want to be taking advantage of them.
Another example, which not all companies offer, but many do, and it's worth looking into, is our company offers something called deferred compensation plans, or DCP. And it's basically you can defer compensation into a fund that's kind of like a 401k. It reduces your taxable income and it just defers it to a future date, and you get a bunch of choices on like when you set that date. But it doesn't have to be a retirement age. It could be that I just want to defer it from when I'm, 39, which I am now, to when I'm 49 or something. So it's a cool program. And I've talked on a previous episode that Mike convinced me to take the plunge this year and go and defer 75% of my salary. So when I saw my first paycheck a couple months ago, I was shocked by actually how low it was. Anyways, point is, it was significantly less than I thought.
But the amount of taxes taken out on your paycheck were also very
tiny.
low.
Yeah. I was telling someone at work like how tiny my paycheck was. And he was saying like, well, do you regret doing it? And I was like, no, not at all. I was just surprised. I was expecting it to be higher because I hadn't fully, done the math on it. Mike had probably like done the math in his head and knew how small it was going to be.
I wanted to wait for her surprise.
The sticker shock of me seeing how small my paycheck was.
So when we got our first paychecks, we texted each other first thing in the morning to compare notes. Anyway, we digress.
Yes, okay.
All right, let's get back onto taxes.
Okay.
In addition to minimizing your taxable income, you should also have an eye out for capital gains tax. So we'll put some links in the show notes. But essentially, capital gains are what you earn in the market or earn on the sale of something else like a home. And so there are short-term capital gains and long-term capital gains. And so when you are making decisions on when to sell certain investments, short-term, much higher than long-term. The government incentivizes you to hold on to your investments longer. So be mindful of this when you are making your decisions.
What about if you like make a bunch of money in the stock market or something?
So if you make a bunch of money, so the stock appreciates in value, but you don't sell it, you don't owe taxes because you have no realized capital gains.
Okay, you don't do it until you sell the stock.
Right. But this is a disincentive to day trading. Buy a stock and sell it the next day. That's a short-term capital gains. You'll be taxed at a much higher rate than if you were to buy it, hold it for over a year, which is the threshold, and pay a much lower rate.
So let's jump into the actual filing of taxes. So again, it's early February. You should be thinking about this right now if you haven't already started the process. We talked a little bit in the intro about doing it yourself versus not. Mike, I know you're a huge proponent of like, you should do it yourself.
Yeah.
Why?
You should do it yourself because, like any DIY thing, if you DIY drywall or you DIY your plumbing, you understand how it works and how you can make better decisions to maintain things. So if you are doing your own taxes, it forces you to understand exactly where your income is coming from, where your tax deductions are coming from, and allows you to plan better. But also, it just makes you smarter about your personal finances. A lot of the stuff we talk about is doing things manually, analyzing things, talking about numbers with people. Like, this is how you learn and improve. So you should definitely do your taxes yourself.
Yeah, I like that it's a combination of, it's not just do it yourself to save money, which is also awesome, but that it's also so that you truly understand it and get a chance to kind of dig in. It's also worth noting that the programs like TurboTax and other ones like it, H&R Block offer one, a lot of companies offer them. They're really like WYSIWYG, which is what you see is what you get.
Never heard that term before.
I know. It's like a very common term in like product marketing, but it's just what you see is what you get. You're not having to like fill out the tax forms yourself. They're asking you a bunch of questions and then they're confirming things with you. And so it's very easy to do. It's almost like it's almost like a robot, right? It's like talking to a real person, but there's a machine figuring it out for you. So
yeah. And when you do it year after year, it imports your previous filings and it will tell you bought a rental property last year. Do you still have it?
Yeah.
Or did you have any?
Point.
You have 2 kids. Did you have any more?
Honestly, it can remember it better than your own physical accountant could because they have tons of clients. They can't remember it. And so anyways, we're not going to get into whether machines are better than humans, but
that's a different podcast.
You'd be proud of me, Mike, because though I will admit I am still going to use an accountant this year. Next year, I probably won't. I hope my accountant's not listening. One of my best friends texted me yesterday and was like, hey, friends on fire. What's your, like, she was like, our accountant retired. We need a new accountant. And I was like, I know enough about their situation. I was like, you guys don't need an accountant. You could totally do your taxes yourself. I was like, we're recording an episode on this and you'll hear us talk about it for 30 minutes, but go to TurboTax and do it yourself. And she was intrigued and she was like, we're going to go check it out. And they typically would have hired an accountant. So
that's great.
It's working.
So the biggest myth is that your personal situation is too complicated to figure out, or that TurboTax can't do it, or that you need a professional. This is not true. Unless you are managing a multitude of businesses and international endeavors, you have a very basic tax situation. You might have income from a lot of different sources, and you might have deductions in a lot of different ways, but that is not complicated. Like, the resources available on turbotax.com can help you figure this out within 20 minutes. I would encourage you guys, if you think it is too complicated for you to do it yourself, just go online, Google these questions, and see what answers come back. I think you would be surprised how easy it ends up seeming after just a very little bit of research.
Look, I'm like mildly intrigued to consider doing it myself this year. Okay, so most of that was about filing your 2019 taxes or last year's taxes. You might be listening to this in another year. Let's dig a little bit into what you can do this year, because last year already happened. You can't change what already happened. You just do your best to capture everything and make sure you file it properly with the IRS. But we're in a new year. We're actually in a new decade. It's 2020. What are some things, Mike, that you feel like people can more proactively do this year to maximize your tax effectiveness?
The first and easiest thing to do is to understand what benefits are available to you within your company. 401k, health savings account, dependent care flex savings account, deferred compensation plans. Companies offer a lot of different ways that you can reduce your taxable income, which is, again, the big opportunity for people. If you are not opening up a handful of accounts every year with your company, chances are you're missing some good tax savings opportunities.
And it's worth noting that for things like HSA, and which is health savings accounts, and flex spending accounts, and all of those types of accounts, there's usually a 1-year window that happens in, early Q4 that when you sign up for those. And so you've already missed that for 2020. But the one thing you haven't missed is 401k. Almost every company offers a 401k or some version of it if you work for the government or something else. You can change that amount throughout the year, and it's not too late for you to maximize that opportunity this year, which from our point of view is maxing out the government limit, which is $19,500. And we're going to do a whole episode on 401ks, so we can just leave that one at that for now. Yeah. What else do you think people should be doing?
In addition to trying to reduce your taxable income, the other thing to really keep an eye on is your investing strategy when it comes to short-term and long-term capital gains. We're not financial advisors, but I would encourage you guys to be investing for the long term, not to be day trading and trying to time swings, because not only are you probably going to make some errors, but you're going to be paying short-term capital gains taxes. So as you're going through the year, be mindful of what tax rate you will be paying on those investment returns.
Cool. I think one other thing that is also worth doing is doing a little bit of research of what tax credits are available that year. So if you already know you're going to do some home improvement projects to your house, for example, there's certain things where, like, if you get a certain type of windows that meet the right energy, star levels, etc., you're going to get a big tax credit for that, versus there might be just a different type of window and you didn't realize you've chosen the one that doesn't apply for the tax credit. So just to kind of do some research, like there's something I was just reading about some new 2020 solar panel credits. And I've always wanted to get solar panels, but I've not been willing to take the plunge. And just as an example, like, research what's available and what's out there. And again, don't go doing something just because it's a tax credit if you don't need it. But if you're like, I already need a roof anyways, let me make sure I get the kind that will qualify me for the tax credit.
Right. Don't spend 20 grand on your roof to get a $1,000 tax credit.
Again, that's not how savings work.
Right. But generally speaking, the best thing you can do is just to be mindful of these things. And the best way to be mindful is to start filing your own taxes so that you are consuming the information that's available out there.
Okay, so that was a great discussion on taxes. I hope it wasn't, too granular or too detailed and just kind of, scratch the surface for people, which is our intent here. Let's recap with our kind of top 3 points from today.
All right. Number 1, you need to understand taxes. And I don't think it's that hard to learn, but you need to spend a little bit of time. Hopefully this podcast helped, but you need to spend a little time understanding how they work.
And we'll put a couple notes in the show notes to some good websites and resources that will help you understand how taxes work. Number 2 is you got to DIY your taxes. For 95% of people listening to this, you can do your taxes yourself. Again, I'm still on the fence on whether I'm going to do mine myself or not this year, but I promise you, Mike, in 2021, I will do it myself.
And the reason I'm not just all over you about this one right now is that you've made so many big changes with your personal finances that I don't want to overwhelm you, but I do feel strongly that, Maggie, that you should be doing this yourself.
I can only do so much at once. Also, it'll cut into my podcast time, so...
Okay, that's fair. I don't want to do that because you do all of the social work. Social media work, I should say.
Like how you're clearly not in marketing, the social work.
Number 3 is that you should be focused on paying as little tax as possible.
As legally possible.
As legally possible, because it accelerates your financial goals. Over the short term and definitely over the long term, reducing your taxes is the key to financial independence.
Well, I hope you guys have enjoyed this episode and discussion on taxes. Wait, before you go, a couple quick things. We're going to do a Mike's Minute on the Mic. This is where I ask Mike a surprise question, and he's got 60 seconds to answer it. Look, I'm going to give you a layup of a question today, Mike.
These are typically the hardest for me.
I know, but this one's going to be easy today because
Okay.
we had a tough topic, so I don't think people can handle too much more from you.
Okay.
So
Thanks.
how much do you spend for TurboTax? Like, what's it cost you to file your taxes every year?
Oh, that's a good question. This is harder than I don't
It
actually.
should have been easy. You don't know how much it costs.
Well, I think I paid it last year, so I don't remember. Okay, so TurboTax software, I believe I pay like $55 for, and then
that was a one-time fee?
no, every year you have to
Okay.
you have to pay for the software, and then you get like one free federal filing, and then I think I pay $20 or $30 for the state filing. So all in, it's under $100. I just don't remember the specifics.
Okay.
But the point is, it's less than $100.
Okay. That's all I wanted to know. I wasn't sure if it was $20 or $200.
We'll put it in the show notes.
Okay. Awesome. Let's wrap this episode up with a few closing items. As always, you can call or you can text us at 404-981-3370. Leave us a question, comment, tip, etc. We will play it on the air.
And please, please, please leave us a review on iTunes or wherever you're listening to this podcast. It really helps others find our show when you leave your review.
For those who have already left us reviews, thank you so much. You can also find us at friendsonfire.org. Okay, what's our next episode, Mike?
We're going to be talking about
Expense tracking.
expense tracking, even
Yeah.
more exciting than taxes.
I know. Yep. Okay.
All
Thank
right.
you.
Thanks, Maggie.
Bye.
Bye.